Hi guys, it's been a while. This is Econoscope, your front row set to the global economy. Dangote Refinery initial public offering. What investors need to know, part 3. So, in this part 3, we're looking at the difference between private placement pricing and initial public offering pricing. And we'll look at other things. So, this distinction is crucial for prospective investors. Private placement pricing is generally designed to reward early participants. IPO pricing, on the other hand, reflects broader market demand and is typically offered at a premium to the private placement price. So as a result, investors who participate in the public offering should not necessarily expect to receive shares at the same valuation available to private placement participants. So the two transactions serve different purposes and target different investor groups. Private placement attract strategic and institutional capital. IPOs broaden ownership and provide access to retail investors and the wider investing public. So, why retail investors should pay attention? Why do they need to pay attention? So, for many Nigerians, participation in the private placement may simply not be feasible. The reported minimum investment thresholds place the transaction beyond the reach of most retail investors. However, the anticipated IPO presents a different opportunity. When the public offering launches, investors are expected to have the opportunity to subscribe directly through the public market. So, historically, major IPOs often attract a significant retail participation as they provide investors with access to businesses that may previously have been unavailable to the broader public. This is one reason why anticipation surrounding the Dangote Refinery IPO has become so intense. Many investors see it as a rare opportunity to gain exposure to one of Africa's largest industrial projects. Why the refinery is generating so much interest? Why is it generating so much interest? The enthusiasm surrounding the transaction is not difficult to understand. The refinery occupies a unique position within Nigeria's economy and the broader African energy landscape. So the facility has the capacity to process approximately 650,000 barrels of crude oil per day, making it one of the largest single-train refineries in the world. Its operations have implications far beyond corporate profitability. The refinery affects Nigeria's fuel import bill, foreign exchange demand, regional energy security, industrial development, employment creation, trade balances, and downstream petroleum markets across Africa. For many investors, the transaction represents exposure not only to a company, but also to a transformational economic asset. The investment case. Let's look at the investment case. Supporters of investment point to several potential strengths. First, the refinery operates in a market with substantial demand for refined petroleum products. Second, management has publicly indicated ambitions to expand beyond current operations. Third, Regional demand across West Africa remains significant. Fourth, Africa continues to face refining capacity constraints in many markets. So these factors create a narrative centered on growth, scale, and long-term strategic importance. So this is where we'll stop. In our next episode, which will be the final episode, part 4, we'll talk about other details. So see you in the next video. Bye.